We could use a technique to reduce your tax burden in 2017, push some of that into 18, and the bottom line was I saved him $410,000.
Guys, look at the crazy crypto prices currently. Because of the crazy crypto prices, more and more people are coming to us and asking us tax questions, how they can reduce their taxes, how they can avoid it even. And what we are going to do today is, because we have one of the biggest, if not the biggest or best crypto tax experts in our show, we will talk about legal ways, and only about legal ways, very, very important, how you can reduce your tax income maybe. And also we will talk about the fact that crypto traders are low-hanging fruits for the IRS. So that will be very, very exciting. We will have Clinton Donnelly, as we said, maybe one of the best crypto tax experts with a huge track record. He already saved millions and millions of taxes in a very 100% legal way from his clients. But it's amazing today. He will not sell us anything. He will only drop knowledge bombs. It's a complete episode only with content, without him selling anything besides his free book, which he is actually giving to us. So that being said, it's very important for us to mention, for transparency reasons, that he is one of the sponsors of our channel. But as said, he is not selling anything, and it is all about the very valuable content about legal crypto shortcuts, and also about the fact that crypto traders are low-hanging fruits. And he will also have some very, very crazy and entertaining stories for us. So guys, we will see you at the other side in a few seconds. So make sure you stay here, make sure you smash up the like button, and you can also leave some questions in the comment section down below. So that being said, guys, thank you so much for joining us. Thank you so much for educating yourself with MMCrypto content. So see you in a second, and enjoy the episode, guys. All right, guys, we have Clinton Donnelly in our show. Thanks for being here. Everyone watching that episode right now might be asking himself, who is Clinton? Who is he to talk to us about this serious tax topic? So Clinton, may you please give us a brief introduction into yourself, into your person, your background, your experience and stuff?
Well, it's great to be here talking to you, Chris. I am an enrolled agent, and I have a law degree specializing in the international laws of financial regulation. I specialize in handling the complexities of U.S. taxes and defending people when they get audited by the IRS, or called up by the IRS. And I have significant expertise in the U.S. tax treatment of cryptocurrencies. And I wanted to get on here to talk to you, just to get that information out and get it out as fast as possible to U.S. taxpayers, so they can be safe and make sure that the IRS isn't going to hassle them on these things. So that's why I'm so excited to talk to you about it, because such a lack of information out there on how to prepare your taxes. I had a customer who called me up and said, Clinton, she said, I did these taxes like $100,000 in the market. This accountant said he could do it, and 3 months later, he said he gave it all back to me. He said, I don't know what to do with your tax return. The guy was a CPA. And then she found another one, and the guy said, here's your tax return. I prepared it, but he wouldn't sign it. He wouldn't sign his name on it because he wouldn't stand behind his workmanship. And she was like devastated. And she didn't even file her taxes that year until she met me. So it's a recurring theme. I really understand the complexities, and it goes way beyond just the crypto side. It gets into some complexities we're going to talk about, including anti-money laundering laws. So it's my specialty from my legal profession. I can help. It'll be an interesting conversation.
Yeah, we have some serious topics to talk about. And actually the tax topic is not really popular, but nevertheless, you have to allocate some time to that if you are a trader, because you do not want to go into jail, and you also do not want to give away too much money to the tax authorities. So actually this episode will be very interesting. It will be giving you guys a lot of value, because what we recognized within the last couple of months and years already, we are here also for some years, the people are keep asking us tax questions, and we cannot answer them because we are no expert. We at MMCrypto, we did some research on you. We know that you are an expert. So thanks for being on the show, and thanks for answering all those upcoming crazy questions about crypto, about the legal shortcuts we will talk about, and also about things the people should worry about and not worry about. So thanks for taking your time, Clinton. And maybe we should go straight into it, because the people have time is a scarce resource. Let's go to the first question, and I think it is a question you really like to talk about, and it is this this analogy to the tree, because there are fruits on the tree which are low-hanging fruits and high-hanging fruits. So can you elaborate on the crypto traders and which role they are taking on that tree?
Well, as an enrolled agent, I spend a lot of time defending people with the IRS. And in my opinion, crypto traders are low-hanging fruit for the IRS. What I mean is it's going to be so easy for the IRS to pick them off and squeeze all the money out of them to pay back taxes and penalties. It's so easy. And this is a really big issue because a lot of crypto traders, especially in 2017, never reported anything on their cryptos. And it's just such a concern for me because they're so easy to catch them. I mean, they're like ostriches with their heads in the ground. They don't realize that the IRS sees them. We can talk about that. But it's a really important thing. The IRS already has a compliance program in place. That's basically an initiative to audit. And they are using advanced AI techniques. And it's going to be really important to prepare a tax return, if you haven't already, that keeps you safe. And there's two parts of a tax return for Americans, which is, one is the reporting of your income side, the tax forms that we traditionally know about, but there's also the anti-money laundering forms, which are things that Americans typically have never seen, but they are more important actually than getting the tax forms right. Because let's get into talking about that in a little bit. I think the most important thing that you should know about if you're an American crypto trader is that the IRS already knows who you are. The commissioner of the IRS came out in November. He's a brand new guy. He's a good guy. He came out and said, if you think that we don't know who you are, he said, the IRS has more information about you than you can possibly imagine. So they know, and I'll be happy to tell you about it. But this is why I'm so excited to talk to people about, hey, don't be low-hanging fruit. Get your fruit up to the top of the tree. Yeah. And I show you how in my books I've done. In fact, I've written a book on this very topic, which hopefully people can come. It's for free, and they can learn about why crypto traders are low-hanging fruit. Kind of develop these topics in much more detail, a lot of footnotes.
Mm-hmm. So that's basically a free book where you're also covering some of those questions. What made us concerned is you talked about that AI the IRS is using. So many people actually think they can just hide their tax stuff because they are doing crypto to crypto transactions on Binance, for example. Do you think that it is possible to hide them from the IRS, or are they able to get also those crypto to crypto transactions, even though you are not making something like a KYC on the exchange, because there's always something like an IP address attached to it or some other things you can make wrong, actually. So just from our point, and then you can give your answer, we actually don't think you should mess with the tax authorities because they are very intelligent, and they might be finding a way to catch you, actually. So what's your opinion on that?
Oh yes, in the past, the IRS, when they would audit people, they would send you a letter. You'd have to come in with your box of receipts and explain how you did everything. Mm-hmm. They're not using that approach anymore. I mean, IRS is using the same sort of modern artificial intelligence data mining techniques that big companies are using, like Google, and they have collected this information. How do they know that who the crypto traders are? Well, first of all, we had the commissioner tell us that we know more than you could possibly imagine. Second thing is, we know because of a guy named Edward Snowden, who is a folk hero in the U.S. Back in 2013, he fled with the National Security Administration secrets. He said that the NSA already had a program in place. It's called Money Rocket, where they were identifying who the U.S. Bitcoin owners were. They were tracked. Back then, it was just Bitcoin, right? They were tracking who all the Bitcoin owners were. That was back in 2013, 6 years ago. Yeah. They also had a program in place called PRISM, and you could read about this all on Wikipedia. PRISM was a system where they captured the emails of people, of Americans. They would capture particularly the metadata. The metadata, Chris, would be the sender, the receiver, the date, the header, what the title of it is. Not necessarily the text, but with the metadata, they can identify you. Because guess what? The only people that get emails from Binance are crypto traders. The only people that get emails from KuCoin are crypto traders, and they know exactly what year you you got that first email from KuCoin, and therefore they know you were a crypto trader back then. Do they know how much money you had in the market? No. But there are some indicators that they're going to use to basically separate the big fish from the small fish, so to speak, to prioritize who they go after. But they know these things. And the next thing is, well, okay, great. People say, the NSA is not going to share that information with the IRS. The Department of Justice and the IRS Criminal Investigation Unit already have established the position that organized crime, terrorists, and drug dealers, international drug dealers, all use cryptocurrencies to go around the anti-money laundering laws. So under that context, and those are national priorities in the U.S., they can get all the trader information from the NSA. So if you think, I'm talking to an American trader, if you think the IRS doesn't know something about you, it doesn't know that you've been active in trading in prior years, you need to stop and reconsider that.
Okay, so thank you for that. You already picked up the next question, which would have been that how does the IRS know who the crypto traders are? Thank you for picking that up, because actually they can find it out. So thank you for that. But and
that's a good point, especially for people that aren't Americans listening to the show. You're German and you're Japanese, whatever. The same techniques are being used. In fact, there is an alliance, what they call the Five Eyes Alliance, of a joint commission for investigating cryptocurrencies, where Australia, the US, Canada, UK, and Netherlands have all combined together to exchange information they know about the crypto traders in each other's countries. Yeah. This is serious stuff.
Wow.
Now, ostensibly, they're going after, organized crime and drug dealers, but they really don't know who those people are. And they operate on the assumption that you are a criminal because you trade in cryptocurrencies. So, they're treating this very seriously, and it's important as an individual to take your tax return seriously too.
Are you covering all those things also in your book? I mean, we just went through it very quickly. We don't know exactly the content of that, but I think you are covering that also, isn't it?
Oh yeah, it's an 85-page book. It's got I think there's even a neighbor of about 80 quotations, citations from the laws, from court cases, from statements from like Edward Snowden, from the IRS commissioner. So it's really, it's not just one person's opinion. I show you where I get the information there. And the IRS has been saying this all along. They have been saying you need to get accurate on your crypto tax returns, and you need to, they call them information returns. It's called anti-money laundering laws. They've been saying these things, but nobody hears them. But if they can defend it in court that they've been saying it, we're defenseless. So that's my passion.
Yeah, we can feel your passion. We can feel it right now. So let's get to another point. No matter from where the audience is watching at right now, I mean, it's most relevant also to the US people, but actually in each and every country, we have to fill out a tax form for our crypto returns. If you are not living on the Cayman Islands or so, you have to fill that out. And actually in the US, I think you have two parts, the tax form and the AML part, isn't it?
That's true. That's true.
So what is actually, I had one question for the tax part. What is actually reported on the tax part of that particular tax form? Because many people are concerned of that, or they do not really understand what it is all about.
Well, exactly. In the U.S., the individual tax return is called Form 1040, and in it you list all your income and the deductions and those sorts of things. If you have a business, your income and expenses on your business, your investment income, and that's where cryptos come in. The IRS has said that cryptocurrencies are property and that you have to report the taxes on property. Property generates income when it is sold. So when buying cryptos is not a taxable event. It's when you sell or exchange it that it's a taxable event. And so you report that on the Schedule D, which is where you list the investments. If you had stocks or if you bought and sold a house, that's Schedule D. It's a form called Schedule D. A massive misconception Chris, that most traders had was that if they traded crypto to crypto, that they didn't have to pay any taxes on that.
Exactly.
They thought only had to pay taxes if it went to fiat. And this was a really big issue in 2017 because people were making killings on paper, and they didn't know what to do about taxes. So there was a lot of talk about, no, you don't have to report it unless it goes to cash. Totally wrong. Every transaction, crypto to crypto or crypto to fiat, has to be reported.
Because you are changing property into another property, actually. It's like changing a house into a car or so. I mean, if you are making gains from that, you have to report it.
Exactly. There's actually two transactions that are happening then. You're selling the first coin, and then you're buying the second coin. That transaction is not taxable. The challenge that you face in the U.S. when you try with this sort of treatment is that, okay, now it's in tax. We file our taxes in April for the calendar year, the prior calendar year. So you're trying to figure out, okay, how much did I gain? Here I sold some Monero on Binance. Well, what did I get it for? I don't know. I bought it over there on that exchange. I moved it over here. There was a Litecoin. You have no record. Especially if you're using like a Exodus wallet shape shifting where there's no transaction records kept. A lot of these exchanges don't even keep their transaction records. You can't reconstruct it. So the hard question that you have to wrestle with when you're doing taxes and American taxes is what was the original purchase price? And we call that the basis, because then that determines what the gain is. And if you hold it over a year, you get a more preferential tax treatment. There are a number of services out there that can help you reconstruct that. They're called tax services, capital gains tax services. There's about 20 of them out there. Some are better than others. Some of them try to be portfolio monitors, but that's the challenge. You have to report that as capital gains, even if you're doing what they call like-kind exchange, which was valid up until the end of 2017. Like-kind exchange basically pushed, it made it so you didn't have to pay taxes right away. So if I had one coin and I switched it to another coin, you have to report that as a like-kind exchange, no taxes paid. But then when I sell the second coin, I pay taxes on the total gain of the two coins. That's what like-kind exchange was. That went away at the end of 2017. But a lot of people said, oh, I don't have to file anything because there's no taxes on it. You got to file it, otherwise you don't get it. So it's crazy, and it's complicated. And sadly, all the big tax preparation firms like H&R Block, big service in the U.S., have no knowledge of how to report these things. Everyday accountants have no knowledge about it. Even CPAs. I talked to a guy who had talked to his KPMG accounting firm about how to do his taxes on this, and they said, don't worry about it. Just report the ones you took to fiat. So even big firms are like stupid in this area. And part of the reason is because when you're filing tax, because taxes are actually tax law. It's actually law. It's not strictly accounting, although accountants tend to do a lot of the taxes for people because it does base itself on accounting principles. But with cryptos, you're touching more onto laws that CPAs and traders, chartered accountants never have any experience with. And this is why crypto traders are low-hanging fruit.
So it can be actually a very expensive misconception to think that crypto to crypto, and talking now about the US American laws, is not a taxable event. And also we can say it's in Germany it's like that, and also in many other countries it is like that. So that can be a very, very important, very expensive misconception. That was enough for the tax part. But are there also things to consider on the second part of that tax form, the AML part? So what is reported over there? Are there things people can make wrong? Are there things people really have to take an eye on, or something like we really have to consider when filling out the AML part of the tax form?
Right. So, and this might be new for a lot of U.S. taxpayers. If you have a foreign financial account, then you have to fill out the FBAR form, FBAR, Foreign Bank Account Report. So if you had an account on Binance, you'd have to report that on the FBAR form, which gets filed at the same time as your tax return. If you have all your foreign exchanges need to be reported on there. What happens if you don't report it? And you should. It's a $10,000 penalty per account.
Mm. Is it dependent on the amount on the volume, or is it like fixed 10K for everyone?
The penalty is if you had to file, the penalty is $10,000 per account you didn't report. Now, there is a safe harbor. If you're a small trader, if the sum of all your foreign accounts, whether they're foreign crypto exchanges or foreign bank account and brokerage accounts, if the sum of that never gets over $10,000 itself, then you don't have to fill in the form and there's no penalties. So if I had $8,000 in Binance and then I had $8,000 on KuCoin, I would still have to file this form because together the total is 16,000. So that's a very important misconception people have. It's not 10,000 in a single account, but 10,000 altogether. Here's how. So that's the first form, anti-money laundering form. The second anti-money laundering form, also frequently called the FATCA. It's a famous law, one of the most egregious laws the U.S. came up with. The FATCA form requires you to report not just your foreign exchanges, but also the volume of transactions you had. And what it says in the law, and I quote this is the Internal Revenue Code, section 6038D. It says you have to report on your tax return any financial instrument or contract for investment purposes where the counterparty, the recipient, is not a U.S. person. Now, when you're trading on an exchange, you have no idea who you just sold, that Monero to. You have no idea who it is. It's the beauty of the exchange.
Yeah.
You have even if it's on a U.S. exchange, you still could be trading with a foreigner. You could be trading with a gangster in Colombia. You have no idea. So under that law, because you can't prove it's not a U.S. person, we have to report all your transactions. You have to report the total volume of transactions. So that means the sum of all your buys and all your sells in exchanges during the year. So this could be quite a large number. I've had people say, hey, Clinton, I only had like $30,000 in cryptos at any given time. How come this number on this form says I had $200,000? I said, well, you did a lot of trading. You turned over your inventory a lot during the year. Every time you bought 30,000, you sold 30,000. You bought another 30,000, you sold it. Next thing you know, you're hitting a big number.
Yeah.
So failure to submit that form when you should have is a $10,000 penalty itself. The safe harbor on that is if you have, if your total volume of trades is less than $50,000, if you're single, $100,000 married, if you're living outside the U.S., it gets to be a little bit higher. But if you're under that level, you don't have to file that form. But in my experience, it's pretty easy to trigger that form. Even if you only traded on U.S. exchanges, you'd still have to file that form. So that is, in brief, what two forms that anti-money laundering forms an American needs to trade. So I think what I want to tell you is how the IRS is going to do its compliance campaign to go after crypto traders, because we've talked about it. You said it perfectly, Chris. They think, hey, I got my money on Binance, I'm buying and trading there. How would the U.S. ever know about it? All right, and the way they're going to do it, of course, with the computers, is they've already identified you. We talked about that with the NSA, turning over who they are. Then they know that you were a trader on certain different foreign exchanges. All they have to do then is say, well, did he file the FBAR form and report these exchanges? We tend to think he's a big fish, and he should have. And here's what the IRS does. They issue the computers, not a human, a computer issues you a letter. On this letter, they say you have now been fined $10,000 because we believe you should have filed the FBAR form and you didn't.
Yeah.
You now have 30 days to respond to us with a corrected form. Now, the next step is, okay, you receive this letter, you're like, oh my gosh, what's going on. So you write up an FBAR form. You now list these 3 exchanges. You were on Binance, KuCoin, Cryptopia, Huobi. Here's 4 exchanges you're on. You send that into the IRS. Some guy says it, like, oh, you were on 4 exchanges. That $10,000 fine is now $40,000 fine. Oh, by the way, on the first letter, they said they didn't just ask you for 2017 because they know you got involved in 2015. So they're looking for 2007, 18, 17, 16, 15. They're going to have 4 years at one time. Every account, every year, $10,000. Before you know it, you're going to be over barrel 6-digit fines from the IRS before the IRS has even looked at your tax return to see if you even filed your cryptos and reported them. This is a guilty until proven innocent approach.
It's like different to the all the other law aspects where you are unguilty and then they prove you guilty actually.
Exactly. Like the old-fashioned approach where you get audited, they would identify you, they'd have to do all this work before they could assign a penalty, right? And then you could use the appeals process and stretch that out. But with the anti-money laundering laws in the compliance campaign, they can immediately assess these fines. They need very few human workers at the IRS to do this, because computers are sending out the letters, very automatic penalties that come afterwards, and you're totally on the defensive. You have to prove all the work is on you, whereas in an audit, all the work is on the IRS. So this is how they're going to quickly hit people. And when you respond with all these exchanges, if you're smart, you're also going to report that you didn't file your cryptocurrency gains, all right, the capital gains, and so they're going to hit you with fines and penalties on that. And because they're related to foreign transactions, the accuracy penalty is kicked up to 40% penalty on top of what you didn't report. And they can do this all without even auditing your cryptocurrency, buy and sell prices. So this is how they come after people.
So for the form, just to go back to the form again, if we just put that together very quickly, we have for the first one, we have the misconception that we have crypto to crypto, which is also a taxable event. And for the second one, there is the misconception that even if you are trading on Coinbase, which is a US American exchange, you cannot just assume that you are not trading to a US person, because actually people from Germany, from Europe, like everywhere in the world, they can also sign up on Coinbase and trade with you there. So you always have to assume that you are trading to a non-US person, and therefore that you have to fill out the AML form, because otherwise they can just say, okay, you are laundering money through Coinbase, for example. So that's the 2 very expensive misconceptions which can hit the people. And now I want to bring something up, because many people are watching that right now. They are scared. They think, oh, they will get us all. I mean, basically, you can divide the traders into different groups, I guess, because the IRS and also other tax authorities from other countries, they are not for everyone. They are not going for everyone and putting all their resources in each and every one who put like in $100 a month, a year or so into crypto. So let's assume. Let's put that picture in. Let's assume the IRS is a shark. Are they going to the ocean and going to trying to hit all those fishes in the sea, or are they only for certain fishes in the sea? Can you maybe please elaborate a little bit more on that, so maybe some of the viewers can get a little bit more released? Even though, guys, please, even though you have to apply to all the tax laws out there, even if you are a small guy, guys. Everyone should act in a legal way, especially when it's about taxes. So, please.
Very good. Hey, excellent summary of the rules. Good job. Really, the IRS is going to look at, once they've identified all the traders, they're going to try to separate them into the big traders and the small, the big fish, the small fish, exactly, and the middle-sized fish. And, small fish, like I had a guy call me up and, and he's talking, he's worried about, his airdrops, he's worried about this. And I said, well, hey, tell me, at the end of 2017, how much money did you have in the market? I had about $200. I said, here, why don't you buy my book? It'll explain things. You can't afford me. But people are worried. Even small people are worried. I'm sympathetic to that. That's why I wrote a book. It's on my webpage. It's a 250. It's called 10 Steps for a Great Crypto Tax Return. And it's perfect for someone like that to do it themselves using TurboTax or Tax Act software and to do your own tax return. But if you're a big fish, if you're a middle-sized fish, you probably have something more sophisticated you need it done. And there are tax amnesty programs that the IRS has available to go back and fix prior year returns. Well, why do you need a tax amnesty program? Well, remember these AML forms I talked about, the two of them. If you don't submit them on time, if you submit them late, it's a $10,000 penalty. So you just can't go and submit the forms to the IRS. They'll hit you with a penalty. And what you need to do is submit it under a tax amnesty program. It's an official program. There's certain paperwork that has to be filled out. You have to give an affidavit, legal work, and then those penalties are waived. Hey, look, if you're a trader in 2016, 17, and 18, you didn't fill out these forms, both forms, that's $60,000 worth of fines that take another extra step and do the tax amnesty program, then you can get those fines waived, because they're very, very serious about these fines. This represents the new way that the IRS is bringing in massive amount, is trying to pay down the federal deficit. They're using administrative law, which, you're guilty till proven innocent. They just hit you with the fines. So it's very important to use the tax amnesty programs that are there, that are available to you. And if you're someone like that, they can call me up and I can help you do that. I've done over 700 tax amnesty returns or submissions for people, and I've had a 100% success rate. I've worked with crypto traders. I've also worked with Americans that live outside the United States that just stop filing. In the U.S., you actually always have to file, regardless of where you live. So I'm very happy. If you're like that you have past filings, give me a call, and I'll show you very quickly how we can it's easy and affordable to get things back right.
But you want to basically say that when you have $200 in the market or $1,000 in the market, a call might be not the best strategy to get your questions answered. I mean, for those people, the free book might be the perfect answer, because it's free, and even if you have $20 only in the market, if it's free, it will be profitable, most probably for you.
Exactly.
So yeah, perfect. Thanks for elaborating more on that.
Let me tell you a story about a guy called me up last month, and he's a physician. And so he makes a lot of money just working at the medical clinic, right? He pays a lot of taxes at the medical clinic, withheld automatically. But he started getting into cryptos in 2017. And of course, he had a lot of disposable cash, so he made bigger buys than the average person. By the end of the year, he had roughly $2 million peak in 2017. So he's working with his accountant to do his tax return, and who had always done his tax return. And he said, well, here, look, what do we do with these cryptocurrency gains? And the guy said, well, I'll tell you what, let's file an extension. We'll get 6 more months to do the return, and we'll take care of it then. Well, his accountant never got back to him, never wanted to talk to him about it, and basically just disappeared. He did not know how to handle it and just ignored him. Well, what happened was, the October extension deadline came and went, and this guy never even filed a tax return for anything in the prior year. Of course, he had a lot of taxes withheld, so the IRS really wasn't coming after him immediately. But he had contacted me. He'd seen some of the work that I'd done, and I said, hey, look, not only can we do tax amnesty and fix your past filings, the things you didn't report, but I have some, we could use a technique to reduce your tax burden in 2017, push some of that into 18, and the bottom line was I saved him $410,000, and he got tax amnesty. I got lots of these stories. So and it's easy, it's affordable. We did it very quickly for him. But solutions are available. You're not on your own. It's easy and it's affordable.
So basically, when someone forgot to file something in 2017 or so, you can basically travel back in time and make things correct again.
Oh yeah, it's a real serious issue. Like 1 year goes by, you didn't report it, and then the next year you're thinking, well, I should report them now. Oh no, I can't, because I didn't report it the year before, and so you don't report it this year, and then you get into the spiral where you can never come back to being incompliant. You feel like you're slowly falling into the quicksand of tax evasion. So there is hope. There is really effective tax amnesty programs. If you owe taxes, you pay them, maybe with some interest. But I do have a set of tricks and stuff to help reduce that legally as effectively as possible. So
that sounds good. That sounds good, because that was how we were also triggering the people, because a lot of people are asking for shortcuts. No one wants to give away money for free, and wants to give away more money than they should. So actually we are all looking for shortcuts, but it's very important to be looking at legal shortcuts for the crypto tax issues. So do you have maybe some like legal shortcuts for your crypto reporting, something what we can apply to save some money without going against the rules?
absolutely. Hey, and what I did for the person I just talked about, where people had big run-ups in profits in 2017. If you paid capital gains, which is the tax on your profits, you would have paid a very high amount. But then in 2018, prices collapsed and you had these big losses. Unfortunately, you can't take the 2018 losses and reduce the 17 gains. This is, you had all this money out of pocket paying the taxes in 17, but there's no compensation in 18 for that. So what I've been able to do is, there was a law in the US called like-kind exchange. It was around for a long time. At the end of 2017 or beginning of 2018, the Congress changed that law, so it's no longer available. But I can still use that law to report all the crypto transactions, but yet push all the gains into 2018. They're offset by all the losses everybody experienced in 18, and this is how I saved a phenomenal amount of money. That's what I did for the guy I just told you about. Let me give you another story. Here's a guy. He had about $30,000 of gains in 2017. All right, this is a very typical story, a middle fish story. He had $30,000 worth of gains. Actually, he made a calculation there. Let's say it was actually $45,000 worth of gains. But by going back through and doing a like-kind exchange, we reduced the gains down to $9,000. This was a reduction of $36,000 in taxes. It's actually, at his tax rate, meant he saved $10,000. So it's labor intensive to calculate the like-kind exchange, but he got that money back, $10,000. So we can file that and get that money back. And then we pushed those gains into 2018. In 2018, he had a lot of losses. So those gains just disappeared. There's no tax on them. And he bottom line, between the 2 years, I saved him $10,000. So this is a middle fish as well as a large fish strategy. Another strategy I did for clients, and this is a very common strategy, is Ponzi schemes, or basically a lot of fraudulent operators with fraudulent ICOs or whatever, that never had a legal basis, and they took money from people and they went out of business. Common story. This particular client, he was mining income. He'd been mining Bitcoin since 2012, and he had saved them up. He didn't know he never traded any of them. He just saved them. He saved them over on this very popular exchange called Mt. Gox. And when Mt. Gox shuttered down in 2014, he lost, I think, in the neighborhood of like 80 Bitcoin. So, serious money by today's standards. So, he kept on mining, and then he put it on to an exchange called, I believe it was Cryptsy, which in 2015 or 16, it went under. So he lost all this stuff. He said, Clint, I don't know what to do. I've never reported any of this stuff. I said, I'll tell you what we do. We report all of the mining income, but then we also depreciate the equipment. We write off the utility bill, running the electricity. He had these things in his living room and dining room, right? The computers. So we got it down, and then we could there's a certain IRS revenue procedure for when there's a Ponzi scheme where we can just take losses against what he lost on Mt. Gox. So it was a big write-down. He was able to carry that loss forward into future years to offset the profits he made in future years. So the bottom line was, by going back and repairing 5 years worth of returns, he actually got money back.
Cool, man. I mean, you have
and that's money back over and above what I charged him, which is reasonable, a reasonable
Yeah.
amount. So you would be surprised at what a good tax preparer can do for you. Because my whole orientation, as I look at it from the IRS's point of view, because I defend people before the IRS, I know how they look at it. I know how to use their procedures. I'm not an accountant that just knows how to do the tax report itself. I go beyond.
It sounds like some crazy tricks, man. Taking the 2017, 2018 together and stuff, because many people were also concerned in 2017 because of the high gains that and then they lost the money that they are not able to pay the taxes. But if you take those years together, that can already save your life, obviously. And also those other tricks and advices. It's really crazy to see what is possible in the space. So actually, it is very rare to meet something, with those crazy tax advices or tricks. So, can you maybe elaborate a little bit more on how you found out about that? Was it like step by step, or have you read it? So, how did you find out about all those crazy tax techniques?
Well, my orientation to taxes is, a legal orientation. I was able to retire early in life. I had a very successful career selling computers, and I could retire early. I went back and I got a law degree, specializing in the international laws of financial regulations. This is a advanced law degree, and everybody was asking me about taxes. So I took the IRS enrolled agent certification exam, which is the highest federally certified position you can get with the IRS in terms of being certified. And my first clients were up in Toronto, and they were Americans that had moved out of the country, and they needed tax amnesty. So, very complex. We talked about the foreign bank account report. They had 120 bank accounts. It's just staggering. And next thing you know, people started coming out of the woodwork, especially people living outside the U.S. And I became very aware of all the anti-money laundering forms that you have to file. And so that's why, I have filed hundreds of FBARs and the FATCA form 8938, hundreds of these things. And I've counseled people through all sorts of situations. And so in 2017, I got involved with a firm that was doing, or 18, I got involved with a firm as their legal advisor for a cryptocurrency tax reporting. And after I was with them for a little bit, I realized, they're completely missing all the anti-money laundering laws. So, I changed their processes, but then I decided, I'd do this all my own. And clients just came out of the woodwork. And the reason, my whole orientation is looking at the laws. And I start with the laws, and then I look back and look for the angles. It's all about the angles. There's lots of great angles and things that are out there. You just have to have an orientation towards reading them. But most of these things are legal documents. They're not, accounting principles, which is why most accountants have no idea about these things. When people come and tell me, oh, I got this great accountant in the States who's doing my tax returns, I go, there's your first mistake right there. U.S. Domestic CPAs and accountants are unaware of the anti-money laundering laws that have to be filed because they never run into it. You may be the only person they ever had, and so you're vulnerable and exposed because of their ignorance. And so that's my whole orientation. I have so much fun. I have clients in 47 different countries: Australia, Japan, Russia. I know you're in Moscow just recently. I have a client in Moscow, St. Petersburg. Shout out to those guys. Argentina. They're all over, and they all have a lot of. They're doing crypto, and the crypto guys are just coming out of the woodwork. I have so much fun doing this because I love beating the system legally. And it's just a blast. It gets me up in the morning. I get invigorated by it.
So this is already your second like profession right now.
Yeah, it is. Yeah, it is. How old do you think I am?
Phew, I don't know. The lighting is very good right now. Maybe 39, 40.
Hey, I feel like I'm 37 because I'm feeling good. How when I was 6 years old, or 6.5 years old. People say, "Oh, you young boy, how old are you?" I'm 6.5. Well, because I was thinking in my mind, it's only a half a year until I get another birthday cake, and presents. This is all I was thinking about. I'm 6 3/4. But you reach a point, once you're like 25, um, you kind of like stop aging inside, right?
Mm.
You might be, someone who's like 27, like yourself, and you're still 25 inside your mind, right? So I happen to be 37 myself, which is convenient because it's a prime number, and of course, Bitcoins are all about prime numbers.
So yeah, let's keep it like that. 37, very cool. So I can just assume maybe you're older than 37, but you look like 39, 40. Thanks for
I'm not
elaborating.
going to be bound in by chronological limitations.
Yeah, exactly, man. Exactly. And in Germany, in Germany, we say you are just as old how you feel inside. And I think this is what we can all, yeah, apply to our own lives. So always make sure that you are feeling like you are young, and then you are young actually, and you can get older and older as the time passes. So
Exactly.
thanks for all of that. We had a lot of crazy content today, a lot of a lot of tricks, shortcuts, legal shortcuts, things the people should concern, things the people should not worry about all too much. We have your resource, the free book. It's also given down in the description down below, what the people can check out, especially when they are like smaller, medium-sized traders. For all the bigger ones, I think they can also go to the same link and schedule a call or so with you. The call is for free, I guess.
Hey, go to my website, donnellytaxlaw.com. At the top, there's a big green button that says schedule a call with me. Just click on it. It's free. We can talk over your situation in confidence. And a lot of people, I say, hey, you don't have to worry about anything. Or maybe we put a plan in place. It's free information to help you, get safe.
At MMCrypto, we always say cheap is our favorite number, but I think free is even better. So thanks for that, Clinton. Thanks for coming into our show. And that being said, guys, we will see each other at the next episode of MMCrypto very, very soon. So make sure you smash up the like button. Leave also your thoughts and your questions you might have in the comment section down below. And that being said, Clinton, thank you so much for coming into our show. Any last words to say?
Thank you, Chris. It is so much fun to be here. I wish you the best.
Thank you so much. And guys, thanks for watching. And as always, bye-bye.